Tired of tax headaches when your income falls into lower tax brackets? Let's demystify how to calculate it accurately in Excel, saving you time and stress. First, we need to set up our income and tax brackets in one column. List your total taxable income in the next column. You'll list the lower limit of each tax bracket, for example. The first bracket might start at 0, the second at $10,000, the third at $20,000, and so on, depending on your specific tax laws. Next, create a column for the tax rate applicable to each bracket. Then, we'll calculate the tax due for each portion of your income. The key here is to isolate how much of your income falls within each bracket. Let's get into the formula for the first tax bracket. If your income is below the lower limit of the second bracket, the tax is simply your income multiplied by the first bracket's tax rate. If your income exceeds the first bracket's limit, you'll calculate the full amount of that bracket taxed at its rate for subsequent brackets. You'll calculate the portion of your income that falls between the lower and upper limits of that specific bracket, and multiply that by the corresponding tax rate. To make this dynamic, we'll use a combination of subtraction and the if function for a bracket. You'll subtract the lower bracket limit from your total income, but ensure this result is not negative. Then, you'll multiply this by the bracket's tax rate. Apply this logic across all relevant lower tax brackets. Finally, to get your total income tax, simply sum up the tax due amounts for each bracket. This method ensures you're only taxing the income within its designated lower band, giving you an accurate estimation for your personal tax planning. Remember to adjust the bracket limits and tax rates to match your local tax regulations.